Hey Phil, you're exactly the same place as earlier. Okay. I'll just update the stream details. If you can hear something in the background, it's the Champions League. So I've just got the football on in the background. So professional. But like, I work for myself, so it's up to me what I do. And away we go. Right, let's have a look. I've already opened the wine. I'm over goal on both accounts, so I'm kind of... oh my goodness, Schwab's up at 52 again. Charles Schwab. That's having a good day. It's a $2 move today. Right. Hey Julie, how you doing? All right, okay, so we've got resumption on the IPO, CWD. AOL. AOAL. So 793 is the halt to the upside. All right, it's going to halt again. And this is volatile. Oh, yet another halt. First one was like 90 minutes. Then it was like, so this first one was 90 minutes. Then that was 51 to, that was a good 15 minutes. Well, let's see how long this one, probably with 10-minute halt, I would expect. You got 758 to, right, okay, so you got a good 40-cent move on this one. Fair play to you. GDC trying to go green on the day again. So today's been an interesting day. It's a lot of volatility, some good moves. Very choppy, but some good moves. Hello again, Christian. I did say I'd come back for the last 2 hours of power hour. The last 2 power hours, should I say? So the last 2 hours of the market. See what happens. Actually, let's have a look. So let's see. Is there any? I don't think there is, but can't recall. Let's see. Let's have a look at the calendar. See what earnings today after hours, if any. So we've got. Boot Barn Holdings, Stone Cove, Oxford, Hawkins, yeah. Cisco. That could be interesting to watch. Take Two. Well, Cisco and Take Two. They're the ones that could be interesting as far as I'm concerned. Have a quick look at those right now. So, what's Cisco? Let's have a look at Take Two first. TTWO. Ah, it's up on the day. Not big. Cisco. Cisco at 47. Take Two at 125. Take Two could be interesting. IBEX, no, there's not enough volume now, so there's not going to be much after that. Siemens is also, so don't really get the same yeah, so that's market setup. Synopsis, yeah, Cisco and Take Two. That's kind of DLO, D-local, DLO. I'd say Cisco and Take Two are the only two that I'm really interested in watching after hours. Right, guys, let's see what the market, and cheers. Oh my goodness, Ivan Toney suspended for 8 months. Oh, poor fella. Right, guys, so let's get this show back on the road. Let's have a look at Smurfle. Smurfle, low $4, I'm not interested. It is the one that's my blot on today's landscape, but we'll see. Imatec, Been steady gains all day, but it's getting a bit choppy up at the top end here. Zela. Yeah, this was a good trade earlier. Good couple of trades, should I say. Pretty much got the top. Just looking at this on Exela, pretty much got the top of it. 873, the high of days 885. Yeah, I'll take that. 10-cent trailing stop I had at the time, so that's about right. EDC, yeah, it's not moving at all. Come on, hitting the scanners. I'm going to hit the scanners. It's not even moving. So, guys, what do we think? Real Madrid or Man City tonight? One of them's got to go through, even if it has to go to penalties. Yeah, I said I'd come back for 2 hours, do a nice long run into the close. Take a run up into the close. The truth is, I probably won't be trading. I'm over goal. I got over goal on both, and nice trade on, but very quick trade. I'll show you where I got in on both. So I traded both here, as you can see. Spotted this moving up. We got the pullback, steady move up, then we got the pullback. I got into the break of new highs here, and then was able to ride this all the way up. I got out here, got stopped out, I had a trailing stop in place, and I'm glad I did. I was considering getting back in, and then it flushed all the way down, and I'm glad I didn't. It did move back up again, and it's hit those double reformation, but kind of triple top. Double top, triple top, this is coming down. What is important to focus on when trading earnings price action, Christian? It's, if you're intraday trading, if you're day trading, number one, the key focus to focus on is price action. Don't worry about the news. Don't worry about, because the reason I'm saying that is that I've seen earnings reports drop and then be really bad. So like a miss across the board, and yet the stock rallies. And I've seen the inverse, where the report is, it looks like a beat across the board and the stock sells. So focus on the price action. Now, what I would also say is, as the earnings drop, look for a confirmed move, because what you very often see, probably about 60-70% of the time, 2/3 of the time, is a liquidity grab before the actual proper move. So you can trade the liquidity grab, but really you want to be scalping at that stage. So the first little bit, if it moves, you get in, get out, scalp a quick move, and then if it continues, you get the continuation, you get a bit of a pullback and a continuation, then you can continue trading it. Otherwise, if it doesn't continue, you can switch track, and if you go long, for example, if it rallies and you scalp the move up, and then it starts to stall, you get out, you've scalped that initial liquidity grab, and then when it starts to sell off and it breaks below the original entry that you were looking at, or below where it started, breaks new lows, that's when you short it, and vice versa. You can go short, and then when it starts to stall, you cover, and then when it breaks above where it started to sell off, that's when you can go long and ready for the actual move. So very often you get that liquidity grab, and then like a false move before it moves in the opposite direction. If you're day trading, if you trade it, oh hello, we've had a resumption on CWD. That was a bit of a gap down. Look at that. So this halted up. Gap down. Interesting. But two halts to the upside. The last two halts to the upside have been gaps down. Just be careful if you're getting in this to the upside that it doesn't gap down again. Applied, be careful of applied up there at 690 now. Be careful with applied because it's approaching that high of day again, and it's looking like a double top. So you might get a second rejection up there, and then it sells off. So always be wary of that double top when it's the second attempt at a high of day. Market's super volatile, Jack. It's really good. Trading today, so main account were 6,500 of 4 trades, and small account were 137 on 1 trade. So we're over goal on both. We're not like smashing it, but we're over goal on both. All My Home's making a move now. So let's have a look at All My Home. OMH, I'm not trading this. The spreads are usually terrible. Spreads are 8 cents on this. Yeah, this isn't looking great at all. So this is another testimony to, you know, don't get married to a stock. Just because it runs on a particular day doesn't mean it's going to run the next day or the next day or whatever. Yeah, the volume's dying out a little bit on applied. So watch for that coming back in. What I would say is watch for that coming back in for power hour in about half an hour's time. That's because, Jack, that's because you're trading too big. It's rookie mistake number 1. It's probably the most common mistake that people make in day trading. I get this a lot. So when people sign up for Day Trade with Tony and ask me to be their mentor and they're looking for a little bit of education on how to day trade, probably the most common question that I get is, how do I address the emotional aspect? Whenever I get into, when I'm trading on the simulator, I don't get emotional about the trades, but as soon as I switch to a live account, I get emotional and it affects my judgment, and I find it difficult to trade, and I get emotionally involved, and I make decisions based on emotion rather than what I'm seeing in front of me with regard to the price action. And it's the most common question I get. How do I overcome the emotional aspect? And the simple answer is, you're trading too big. There's no ifs, buts, or maybes about it. You're trading too big. Now, you're either trading too big for your comfort zone, or you're trading too big for your account, or more likely, a bit of both. So, size down. The analogy I like to use with regards to learning how to trade is like learning how to swim. If you do it in a simulator, it's like wearing your inflatable armbands, you know, the rubber, the water wings, whatever you want to call them, the armbands, inflatable armbands that keep you afloat. It's you give them to your 6-year-old and they love it. They jump in the water, and they can float. So they know that they're not going to sink. That's what trading in the simulator's like. It's like swimming with armbands. You know you're not going to sink, so you can go into the deep end, you can splash about, and you can go from side to side, full length of the pool, it doesn't matter. When you take the water wings off, what's the priority? You take the water wings off, the priority is staying afloat. It's not about how many lengths you can do, or can you do a full width of the pool, it's about staying afloat. So that's the analogy I like to use. Trading's the same thing, it's about staying afloat. So you trade small, take the emotions out, concentrate on the fundamentals, concentrate on the strategy that you're trading, and concentrate on making logical decisions, both in terms of trade selection, stock selection, entries, exits. Make sure that you're managing your risk. But if you do it with a small size, you're more likely to build up that muscle. There's a little bit of emotion in there, but not so much it's going to cloud your judgment. So if you stay afloat, once you can start staying afloat without really trying, before you know it, you're able to swim from side to side and cover the widths. And once you do a width, then you know you can do a length. So the same thing with trading. Once you can know you can stay afloat, you can manage your risk, you can start to increase your goals, you can start to increase your size. The only difference between me trading and making $6,000 a day and you trading and making $60 a day should be sizing. We should be essentially taking the same trades and trading them the same way. But the difference being is I'm taking 5,000 shares and you're taking 50 shares. That's the only difference. Yeah, so you take profit and your stop loss, it should be a 2-to-1. At least a 2-to-1. If you can't get twice your stop loss in your take profit, shouldn't be taking the trade. So, for example, if you're looking at a stop loss, if you're looking at risking 10 cents, you need to make the trade that you're about to take needs to give you the potential to make at least 20 cents. So, if it's not going to give you 20 cents, you don't take it. It's that simple. It's not a good setup. It's not rocket science. What I've found is the people I've seen that are really successful at trading, this is no shade on them, they're not the brightest. You don't have to be a rocket scientist to be really good at a really good trader. A lot of these people are really good at trading because they're able to detach their emotions. And yeah. Yeah, Jobby, I'm not a big fan of that. Hiding your P&L and from an emotional point of view, hiding your P&L and just trading the chart. I'm not a big fan of that because I'm just not a big fan of that. I think it's important to know what your P&L is, because that way, if you do decide to size up or if you do decide to add to your position, you're not going to overstay your welcome with it. How do I identify my entry point from candles? It's not so much the candles as the price point there, John. Also applied, it just broke $7. Once it crossed that 640 level, it's not looked back. So how do I identify that? So I'm looking at price points. So I'm not looking at the candle itself. I'm looking at price points. So for example, here on applied, I'd have been looking at here, this high here, this top, so 690. I'd have said, okay, 690 is the next breakout level, but $7 is close by. So you don't want to be getting in at 695 because you've got a resistance level there, psychological resistance granted, of $7. So you want to wait for the confirmation of $7, a break of $7, and then maybe look for an entry. But you want to get in. Now you could very easily, legitimately get in the break of new highs here. So break of new highs here was 691. So you're getting at 692, 693, 695, whatever, and then ride that up. I personally would have waited for a pullback here. You broke that new high of day. Now I'm waiting for a pullback. I wouldn't have got in there. You've got to wait for a pullback because you might be getting that double top. So you broke the range of the double top. Now you wait for a pullback. Now the next new high is where I get in. So 710. That's where I get in. No, it's okay. Just 22. Learn as much as you can. Practice in a simulator. You start saving, start putting money into the TQQQ because you'll get a better return on that. Open a cash account, and whatever money that you've got, spur funds, pocket money, part-time job, whatever it is, whatever you've got, a couple extra couple of $100 at the end of each month. Just stick it in the TQQQ or the SPY or anything else. I think the TQQQ is a good bet for somebody who's starting out young because it's going to go long term. The TQQQ, the Qs, the SPY, any of these ETFs that are index linked. The TQQQ, it's linked to the NASDAQ, but it's got a leverage, a triple leverage on it. So it's a 3x. So if the NASDAQ moves 1%, the TQQQ will move 3%. Now, it cuts both ways, but in the long term, it's going to move to the upside. So it's a good short-term, a medium to long-term investment for someone who's doing long-term investing. So when you're young, you don't have to worry about day trading. You're building for the long term. Learn as much as you can, but whilst you're doing it, put a couple of $100 away, like I say, something like a TQQQ or whatever, and but if you're doing it, start at 21, 22, and you do it till you're 30, you won't have to do anything else after that. Because by the time you're 50, which is the earliest you'll be able to retire, you'll be a millionaire. You can invest like a couple of $100 a month from age 21 to 22 till you're 30, and then stop at 30, leave it there in the same ETF, based on what the markets are doing, and by the time you're 50, you'll be a millionaire, and you'll be able to retire. Simple. Don't worry about making small amounts of profit, Jack. So the whole point is, like I say, it's staying afloat. As a starting trade, look at this like playing football. You've got to be in it because you enjoy it. Okay? As a day trader, as a retail day trader, you've got to be in it because you enjoy it, first and foremost. Don't be thinking this is going to pay my college tuition, this is going to pay my mortgage, this is going to pay... Because if you do that, you're putting undue pressure on yourself that's not warranted, okay? Think of it as a hobby. And if you think of it as a hobby, hopefully you become good enough that in a year or two's time, you can actually give up your day job and this can take over and become more than your 9 to 5 and pay more than your 9 to 5. But to start off with, you think of it as a hobby. Now, if you play football or tennis or racquetball, squash, whatever you want to call it, cricket, when you go at the weekend, when you go during the week, you go to the gym, whatever it is, you pay your sub, you pay your entrance fee, it costs you money to do it, but you get a reward from it. Whether you go to the gym, you get the physical gains from it, but you're paying your money, you're paying your subs. So think of it, to start off with, is you're paying your subs. You're learning a new skill set, so you're paying your subs. That's the first thing you need to do. Making small gains, stay in the flow, making small gains, making small losses. That's what you want to be doing. Don't be worried about making big profits. Just because you see someone like me or someone else on the interweb that's making bigger gains because we've got a 6-figure account and you don't, doesn't mean that you should be looking to do that. Start small. Eventually, when you get the level of consistency, that small will become medium and medium will become large, and then you'll become a profitable, consistent trader as well. Try. Yeah, I'm holding TQQQ as well, Christian. So Jack, try Capital Markets Elite Group. There's a link in. Go into my my profile. Click on my face on TikTok. Click on my face in my profile. The link there. It's Linktree, the TikTok trader. click on that and then scroll down to Capital Markets Elite. You scroll down to that, Capital Markets Elite, that's the broker I use. It's the one I recommend. There's no PDT rule for people like yourself, so that's who I would recommend use. And you can start, you can open an account from like 350 bucks upwards. I wouldn't recommend trading with 350 bucks. I would recommend a minimum of 5,000, but the good news is if you use that link, you can use the simulator for $120 a month, which is cheaper than it would for if you went to Dash Trader and got it directly from Dash Trader. How much capital I started and how many years? John, good question. Well, I started off with a $10,000 account and I blew that up. So then I topped it up with $5,000 and I blew that up. Then topped that up with another 10,000, almost blew that up before I started becoming consistent. No, tell a lie. I blew it was 5,000 again, blew that up, and then it was the 10,000. So I did. I put about, in total, I put about 30,000, just over $30,000. I lost $30,000 before I became consistently profitable. A lot of money. It's an expensive tuition, but I would recommend a minimum starting capital of at least $5,000, and then you want to be setting goals of kind of 1-2%. If you've got a $5,000 account, let's do the math quickly. You've got a $5,000 account, and you're setting goals on a daily basis, on an annual basis, or whatever it is. You set a goal of 1% growth of your account per day, on average, for the best part of a year. Once you get to kind of 30,000, 50,000, it's the economies of scale don't work. So then you need to set actual numerical dollar value goals as opposed to percentage goals. But let's just say at a small account, you can set percentage goals. So if you look at 1% gain per day on a $5,000 account, it means that you're making 50 bucks. So you start off and you're making 50 bucks. It doesn't sound like a lot. You're covering the cost of your trading. But over the course of a couple of weeks, let's say 2-3 months, that 50 bucks a day over the course of however many days, let's say 3 months, that 50 bucks will grow that account from a $5,000 account to a $7,500, $10,000 account. You probably double your account in that time. So just grow it incrementally, but start off and have small goals, small gains. If you can do 1% a day, it doesn't take a genius to work out that 1% a day over the course of the long term will have you earning absolutely shitloads by the end of in a couple of years' time. Cheers, Gideon. Well, you compound it. You compound it, John. So you work it out. So that's what I'm doing on the small account right now. I'm doing a 10% because I'm being a lot more aggressive. But if you did a 1%, it's the same thing applies. So a 10% that I'm doing I did a $500 account and I'm working at 10%. But if you did a 1% on a $5,000 account, the numbers will be pretty much the same. So after a couple of weeks, you've been looking for, 100 bucks. After a couple of weeks more, you've been looking for like every 2 weeks, you've been kind of doubling in terms of size. If you're not comfortable with that, that's fine, but your account should be growing incrementally. You might want to just stick with, look, I'm looking for $50 for this month. That's $50 a day is my goal this month. And then at the end, if you've averaged $50 a day, you might say, okay, well, next month, I'm going to look at $100 a day. I'm going to double it up. And then the month after, I'm looking, okay, now I'm doing $150 a day. And you slowly, incrementally increase. Let's just think about it for a second. The average industrial wage in the US is about 48,000. It's about $48,000 a year. So $48,000 a year works out about $4,000 a month. $4,000 a month. That's on a 20-day month, or if you want a 4-week month. But the 4-week month is what was saying $4,000 a month. So that works out about $1,000 a week. So $200 a day. There you go, $200 a day, and you're earning more than the average industrial wage in the US. $400 a day, and you're in six figures. You put it that way. $500 a day, it's a six-figure income. $1,000 a day, and you're in the top 1%. And you look at it long term. It's a long-term plan, a marathon, not a sprint. To get to $500 a day is a big, it's a big jump for a new trader. So I know people like Alistair and some of the people have taken the course. They've had the lump sum to start off with. They've taken to it fairly well, so they can do $500 a day, $1,000 a day. That's okay as a goal for them. And they've had they've had a really good mentor that's helped them along the way. Probably not the best mentor, but certainly top 3 to help them along the way. In case you're wondering. It's only the one trade. I've only taken one trade since I wrapped it up earlier. Getting. I've got dog hair on my wine glass. Your dog hair gets everywhere. I'm sorry, guys. I need a top up. I'm not sitting here waffling without wine. By the evening. Jack, absolutely. So it doesn't matter. So depending on how you want to trade, there's two things. So you can trade pre-market. So take a little bit of time out on your lunch break and trade pre-market. So depending on what time your lunch break is, and trade pre-market. But if you're working 9 to 5 in the UK, the easiest thing to do is do your day job, come home, have something to have a bite to eat, then sit down in front of the market. If you finish, let's just say you're going to do your 9 to 5 and you're getting home, let's say 6 p.m., 6:30 p.m. Okay, you have something to eat. You're all nice and refreshed. You clean up, have something to eat. It's 7 p.m. in the UK. You've still got 2 hours of the market left, and you've got one of the most, the last hour of the market, which is power hour, is the second most volatile period of the day. So after the open. So you can trade the power hour. And just as you're learning, that's okay. You've got earnings after hours. You get the volatility earnings. You can trade the earnings. So you've got a good 3 hours that you could trade after you finish work. No problem. Depending on where you are, you can always fit in trading part time. Failing that, if you like, for example, if you're on the east coast of the US and your 9 to 5 is 9 to 5 market time, then swing trade. You can just check your positions. You set your positions first thing as the market opens. You set your positions, or even set your positions pre-market, whatever. Set your positions. Come back later in the day, check it at lunchtime, whatever, and then come back at the close of business or after hours and close them out. Or just leave them overnight and check them the next day. Swing trade. I give a nice introduction to swing trading in there's a swing trading course in the day trade with Tony day trading course as well. So that's a bonus that I throw in there. So there you go. Teach you how to swing trade and how to day trade, all for the low price of 119 bucks. I don't like this tune. What is it? Sahara Desert. I'll have to delete that one. I'm not sure who I'm bothered about winning on this Madrid versus City. As long as they lose the final to Inter, I'm not bothered. John, when I take an entry, I absolutely do look at the last three candles and all the candles leading up to that. So it depends on, like I say, the last three candles can be... You're looking at the patterns, so depending on what the last three candles were, if you might be getting a bull flag, so of course that's a number of candles building up a pattern. But that will give you, so the price action is where it is. So the last candle, for example, on a bull flag, you're going to move up. I've probably got a bull flag set up somewhere that I can use. Here we go. I'll look at upstarts. There's a few bull flag setups here. Okay, on the 1 minute. Let's pull back here. Okay. So we traded this here, but this one here, for example, we've got a nice move up, then we've got the pullback, and then if you're looking for the pullback, you might get in here. First candle makes a new high. You get the initial move, that's your flagpole. Then you get the flag, which is the consolidation phase. And then the next candle that makes a new high, that's your entry. We've got similar situations up here. We've got the move up, your flagpole, the pullback. Then candle makes a new high here. That's where I got in. So that was a bull flag setup. It added up the top, granted. But so bull flag setup, you're looking at the candles. Here we've got a bit of a kind of a double bottom. It's a bit of a wonky double bottom. It's a double bottom. So here we'll be looking for the break. It's this move down, swing high, move back down, swing high again. So we're looking for the break of this level here. The break of this level, 21.91. We've got 21.91 here, or 21.90 on this one. So it didn't break it, so we don't enter. On the next attempt, it breaks it, that's where we enter. And then we can ride that up, take profits up at the top. So you do look at the previous price action. You're looking for signs of continuation. You're looking for the volume at the bottom. Depending on where you put your volume profiles, I used to have on the background. I've got volume by price on the background now, but I used to have the volume on the background. It got a bit messy, so I've moved the volume to the bottom. So you're looking at the volume, you're watching your level 2, you're watching your time and sales ticker tape going through as well, and you take all of these data points and you use those to make a informed decision as to whether you believe that this stock is going to move higher from where it is right now. And if it is going to move higher, what's the trigger? If we've got right now, for example, we've got resistance up at 22.10. Because that's where it got rejected at last time. So there's resistance there. So if we get back up to 20.05, why would I take a position there when I know I'm likely to get rejected? Or there's a possibility I'm going to get rejected at 22.10. So now I'm looking at, okay, 22.10, I need to look at the level 2. Is there a seller wall at 22.10? Why did we get rejected previously? And if there's a seller wall, then I wait for the break of 22.10 before I get in. TSM. Take a look. Taiwan Semiconductor. It's having a good day today. It's up 6.5%. But it's nice, and this is the good thing about trading higher cap stocks. So I like to trade the volatility of low float, low cap stocks. That's just what I like to do. I think there's more potential to have intraday, really good intraday gains trading the low cap, low float stock. However, safer, more tranquil, less stressful trading is the likes of the higher cap stocks. So the likes of a TSM, once they start trending, they tend to hold that trend a lot longer. So you're less likely to get faked out and flushed down with the higher cap stocks than you are in the low float stocks. Just putting that out there. As a beginner trader, the higher cap stocks are easier to trade. However, as a beginner trader, the likelihood is you don't have the equity or the capital to trade those higher cap stocks. So you end up going with a broker that's going to give you 20x leverage margin, and you end up going with 20x leverage to trade a 1 or 2% move on something like a Taiwan Semiconductor, and it makes it even more volatile, and you blow up your account. So you're introducing risk, trying to take advantage of these smaller percentage moves because you've got a smaller account. In regards to growing your portfolio, what percentage do you withdraw to pay for essentials? That's actually a good question. So I've been through, so last year, for example, I've changed my tune a little bit. Last year, what I did is I withdrew all my profits. I started every month with a $30,000 equity position, and I withdrew all my profits at the end of a month. Now I leave it in, and I see where I am at the end of the month, and I withdraw. I started, I think, 85,000. I think it was at the beginning of this month, but I withdrew nearly $250,000 and it started with 85,000. I'm now back up to 236,000 starting position on this account. So yeah, with a small account, I would say don't withdraw anything. If you have a good month, at the end of the month, assess. But if you've had a good month and you've made a nice amount of profit, withdraw half your gains. So if you start with $5,000 and you make $5,000, at the end of the month, reward yourself with a nice little $2,500 paycheck. The next month, you're starting with $7,500. So you're starting with a bigger account than you were the previous month. And you do the same thing. So the next month, let's say you double your account again in the next month, which is difficult, but let's say you double your account. You've then got $15,000. So what you do is you reward yourself with a nice $5,000 paycheck, and leave 5,000 in there. So you end up, you've got $10,000 account. So and then you grow incrementally doing it that way. What I would say though is if you're withdrawing, my rule of thumb, it's not financial advice. I'm not a financial advisor, but I do suggest you do this. Is when you withdraw, if you've had a good month and you withdraw your profits at the end of the month, split it into 3. Why 3? A third of that you can spend on whatever you want. You can go out and buy your new watch, or put down payments on that Lamborghini that you wanted, or whatever. Of course, I'm joking about Lamborghinis and Lambo money and stuff, but in theory, the new Vauxhall Corsa that's just come out, you might want to put a down payment on that. So a third of it is yours. A third of it, the taxman's going to want his slice of bacon. So put that aside. At the end of the year, you can work with your accountant, and if you put a third, every time you withdraw, if you put a third of that away, when your accountant comes, you'll get a nice bonus because you won't owe that much to the taxman, because your accountant, if you've got a decent accountant, he'll be clever, he'll minimise your tax liabilities, and what you put aside, which is, like I say, 33% of your profits. What you put aside, it'll be substantially less that you owe the taxman. So you pay the taxman his due, and you've got a nice little bonus for yourself. And the other third that you're doing, so there's a third for you, a third for the taxman, and the other third is to reinvest. I remember I said a little bit earlier about the T-triple-Qs. I'm holding the T-triple-Qs. Start building yourself a little portfolio, Disney, Amazon, Apple, whatever stocks you feel, do your due diligence, but whatever stocks you feel long-term are going to be good for your retirement, start building it. The sooner you start building it, that portfolio, the better it is. It's going to be. The more it's going to be for your future. And once you get to that level, you're going to get the dividends from there as well. Reinvest the dividends, but you get the dividends as well. When you get to your 50s and 60s, you can actually take the dividends and live off them, and you don't have to worry about an income. Itchy toes. Sorry, I'm just scratching my foot. Exila. Let's have a look at Exila. What do I see here? Okay. So for me, I'm looking at this on the 5 minute. As you get later in the day, it's better to look at the higher time frames. They tend to be more reliable. So 8:30. Got one here, 8:30. We've got resistance at 8:30. We've got resistance at 8:40. We've got resistance 8, so we've got resistance every 10 cents here. So I would get a bit choppy here under 820. This is suggesting this is a potential flat top type area, so I wouldn't touch this before 830 now. It's a nice little, it's cutting around nice, a little kind of cup and handle, but I would say your breakout 820 was a bit of a fake out there. 820 is possible breakout, but I'd give it a little bit of room and look for the high up here before the actual dip of the cup. And I would say look for 830, and then if you get 830, look for the test of highs as your target. You're looking for a new high of day. That's just me. Not financial advice. I'm not a financial advisor. If that doesn't work for you and you lose money, don't sue me. Just my opinion. Just the meanderings of a fat guy on the internet drinking wine. Remember, smash the thumbs up button if you're watching on YouTube, please. It really does help me out. On technicals, but on fundamentals, it has nothing. John, we're day trading. Fundamentals mean nothing when it comes to, well, I don't say they mean nothing. Fundamentals are thrown out the window when it comes to day trading. We're trading momentum. We're trading stocks that have intraday momentum. The fundamentals of these companies are garbage. The majority of these companies, I wouldn't invest a dime in them long term. So fundamentally speaking, a lot of these companies, and there's a reason why Exila, after doing a 250 to 1 stock split or whatever it was, 200 to 1 reverse stock split, there's a reason why it's still only $7.50 a share. So it's because it's a garbage company. It's a terrible company. Most of these companies that you see me trading on a daily basis are terrible companies, unless I'm trading earnings, where I look for the higher cap stocks, or I may look to trade one of the more higher cap stocks intraday if it's having a particularly good day, like an AMD or an Nvidia or something. But the majority of these low float, low cap stocks are rubbish. You don't want to be paying too much mind to the fundamentals, or you would never trade them, quite simply. Technicals is 80% of intraday trading. It's your technical trading. Get used to doing technical analysis. Learn how to spot the windows. Learn how to spot the support and resistance areas. Learn how to identify the patterns. The areas of consolidation, and technical analysis is the largest part of being a profitable day trader. Technical analysis will get the technicals will get trumped by a fundamental catalyst every day of the week. So if you get on the chart, you see a nice pattern forming, and then news drops, and let's just say it's a bioscience company, and you see a nice little inverse head and shoulders, which has about an 85% success rate in terms of breaking out to the upside. An inverse head and shoulders, a clean head and shoulders pattern, and it's approaching that breakout level. I don't care how good or how clean that breakout level is and how well it's been adhering to the technicals. If it drops a news catalyst and says that, you know, a lawsuit's been issued on side effects against the drug that this bioscience company manufactures, I don't care about the technicals. That price is going to tank. Same thing. It's moving up really, really well, and you get a nice bull flag, and all of a sudden they hit the market with a secondary offering. I don't care about the bull flag. That secondary offering is going to tank the price. It's probably going to tank the price 30%. So if you get wind of a secondary offering and it's coming out before it tanks, then short it if you can. Yes, I can. I will be showing the BXC trade. I'll show it now on the chart, but I'll show the BXC trade, or it's recorded, so I'll show it on the trade recap later as well. But the BXC, the Bosch trade, let me just scroll this way. This is the 1 minute chart here, so you can see it on the 5 minute. But this was moving up. It had the pullback, then it made a move up, and I got in here as it broke new highs. I was able to trade it, take some profit. I got stopped out on this candle here. Then it made a bit of a pullback, and I got back in as it started to make new highs, and I was traded it on and got stopped out up at the top. Really quick trade, nice one. I got out, stopped out before it flushed, but that I've recorded the trade, so I'll add that to the trade recap later. Am I considering CWD? No, not now. IPO, CWD, it's a bit all over the place at the moment, which is normal for an IPO. Getting in, I mean, this 90-minute halt, it started trading, then into a halt, gapped up after 90 minutes, into another halt to the upside, gapped down, consolidated a little bit before moving up into a halt to the upside, gapped down again. Then this one, it's just horrible. It's not predictable at all. Another halt to the downside before moving up there. So this is below the VWAP now, and I'm long biased, particularly with stocks like this. So I'm not interested in trading this right now. There's another volatility halt there, another volatility halt there, normal volatility halt here. The volatility on an IPO is not, it's not abnormal at all. It's kind of expected with something. Now this is it's halted now. It's above the VWAP. This is looking like a $7 gap up. So not a $7 gap up, it's gapping up to $7. So whole dollar gap up. So this is halted at 603. I'm looking at a $7 resumption up here. So am I looking at chasing that? No. I've got a Calvus. Have you got 650? I've got $7 as my resumption. To be fair, your resumption values have been more accurate of late than mine. So welcome to Power Hour, guys. You should start seeing a bit more volume flowing into the market for the last. What tends to happen is you get a little bit more volume coming in. First hour of the market, last hour of the market. Those are the two voluminous, most volatile periods of the day. First hour of the market for sure, and only slightly less is the second, the last hour of the market. All right, okay, no problem. So we're looking at a gap up to $7. This should resume in 2 minutes, just under 2 minutes. I'll keep it on CWD. There's nothing else moving right now. Well, nothing of anything of any note. Nothing really moving right now. But again, as you grow in your account, so as you grow in your account, Jack, as you grow in your account, it's important that you have small expectations and you practice what I preach. I know I don't do it all the time myself, but practice what I preach. Get in, get green, get to goal and get out. Once you're green, stay green, but get to goal, and once you're at goal, get out. It doesn't matter. As a new trader, get used to locking in green days over goal. It doesn't matter if there's loads of other stocks moving. Trade the stock you're on, get to goal or get over goal with it, and then once you're done with it, don't go looking for more. Don't get greedy. Don't overstay your welcome and have the market teach you a very expensive lesson. Just get to goal and get out. There's no point setting a goal if you're not going to adhere to it. Don't know about that, Calvis. I'm on the wine, so the last time I tried drinking whilst I had a belly full of wine, I lost 17,000. I think you were watching me on the stream at the time. Not last year. It's not a good idea to whatever you wouldn't do whilst operating heavy machinery. Don't do that whilst you're trading. That's all I'm saying. Don't smoke a joint and try trading. Not that I would advocate that if it's illegal in your location. If it's legal in your location, go and smoke a joint as much as you want. Enjoy, but don't trade at the same time. Don't drink and trade. Don't take a lot of cough medicine and trade. I've got 7:30, Calvis. It looks like it's a long halt as well. It looks like it's going to be 15 minutes at least. It's had a lot of long halts actually, this one. So, yeah, I've got a resumption up at 7:50 now. Yeah, as a new trader, stay away from the halts. You see the halts on the montage. You can see the halts on the montage. If you've got a decent platform, you can see where the level up and level down is. So if you're in a position and you're getting close to a halt level, take profit at least, or put stops in place. Trailing stop's good. As you're approaching a halt level, once it hits that halt level, you've always got a few seconds. It never halts immediately. There's always a little bit of a lag from hitting the halt level with the ask to the bid catching up. So once the bid catches up and hits the halt level, you've got a couple of seconds before the actual halt takes place. So you can still get your orders in. You might not be able to sell or buy at that stage, but you can certainly get your stops in. And I would recommend that you do that. If you're trading to the upside, and particularly with a stock like this where it's been doing a lot of gaps down, it's going to gap up at this moment in time, but it's been doing a lot of gaps down over the course of today. If you're approaching a halt level, make sure you've got a stop in place. Don't risk it and try and trade your way out of it. I've tried that a few times and it's come back and bit me on the bum. Trading halts is another skill, and I should do a video about how to trade halts, because that in itself is a skill. I should do another chapter on trading volatile stocks. Well, let's take it to penalties. The boring 0-0 draw. Can't see it myself. Maybe I'll have to do one. You like big market with 4 to 5 times leverage? I'm not sure what that means, but okay. Anything else moving? No, I'm not seeing anything moving right now. DJJD, which is 80 cents. I remember that moving a couple of weeks ago. I was talking about mad cow disease. ACAN is the dollar. That's top of the pops there, but. Oof. Oh. I thought City had scored there. Big cap stock. Okay. Larger cap stocks. Yeah, no, the larger caps are easier to trade because they tend to trend. So you're not going to get the volatile flushes with the larger cap stocks, simply because of the liquidity that's in there. The whole thing with the algo flushes is when the market makers take out the bid. They remove the book from the bid, and it flushes down. So you don't tend to see that as often with the larger cap stocks because there's a lot more liquidity in there. So the levels are a lot shorter, a lot narrower, and you don't see the big percentage flush downs. So it's easy once a large cap stock starts to trend. It tends to hold that trend a lot longer, and that's why they say in trading the trend is your friend. I would also add that is the case with low float stocks as well. If your stocks are above the VWAP trending upwards, they're a lot easier to trade to the upside than if something is coming from trying to do a red to green move. Yeah, much safer to trade though. The problem that you've got with that is there you go. There's a $7 resumption into another hold. You couldn't write it. Oh no, false hold. No, not a false hold. No, it's not halted yet. So you're just waiting for the we're waiting for the bid to catch up to the ask. There we go. We've got a new halt level at 835. The spreads are quite wicked, so just bearing that in mind, the spreads on this are like 60 cents. So if you wanted to trade it, great, but 50-60 cents on the spreads is a lot of risk. And then it false halt to the upside into a downside halt. Not quite there yet, but looks like it's not halted yet. It's still not halted yet. It's at the halt level, but not quite halted. So this still might be a false halt. No, it's halted now. Okay, so this is what I'm talking about with stocks like this. 50-60 cents on the spreads into an upwards halt, 60-cent spread. So it went up to what, 835 at the peak, whilst that's on the ask, whilst the bid was down at 770s, 775. So still a lot of risk up there. Then it flushes down into a downwards halt. So just as you think it's halting to the upside, it then halts halt and flushes down into a halt to the downside. And this is looking like it's going to gap down to $6. Resumption at $6. Not jumping in with 10,000 shares, hell no. Not with this one. Not with a 10,000 shares with a 60-cent six grand down. Let's just put it this way: if I went 10,000 shares and a 60-cent spread, I've already lost my gains on the day. That's $6,000 I'd have lost straight away. They won't default McFly. They won't. They'll go right up till the wire, and then they'll just raise the ceiling. That's what's going to happen. I certainly did, Dan. So, small account, one trade on Exela, 137. And gold today was $100. So with 37% over gold. So $100 did 137. So nice. A nice day on the small account. Nice day on the big account. Any day or any profitable day is a good day. Any day over goal is a great day. So I'm over goal on both. Well, I guess, Mike, you bought it. You bought back at 603. I hope you sold at 8. It does, Dan. It does. It's because I'm not having to take maximum. I did yesterday, but I mean, if you see a nice stock, then you can take max size. Great, and 90% of buying power. It's basically max leverage, and away you go. If it's moving up in a nice fashion, but it's the pullbacks when you do that. If it's going to pull, if you're on a volatile stock and it's going to pull back 10-15 cents and you go maximum size, are you going to get stopped out? If you go into a halt and it gaps down, are you going to get stopped out? Are you going to get liquidated? That's what happened on that false start. Is I went into an upwards halt and I entered for the breakout and then into the halt, and then it gapped down and liquidated me. So, you know, unfortunately, it's hard to make money on a $500 account. Now I've got a $1,000 account. I'm now $1,100 on this small account. It's going to progressively get easier and easier to make that, you know, 5-10% until I'm getting to a level where I'm looking to make 1,000, 2,000, 3,000 a day. At which point I'll have hit the goal anyway. So that's a nice trade, Mike. Well done. That's a great trade. Look, the whole $1.70 or $1.60 for the move in the move. You can't argue with that. I must have smashed your goal for the day. So BHC, we've traded that. That's done for the day. Let's see what else is moving. Black box. Not traded that for a long time. Black box stocks. I'm not trading it now either. There's no volume. GSM still breaking highs. Look at this. Yeah, lock it down. Go and watch the football or whatever it is that you like to do, Mike. Lock it down. Switch to paper, whatever. Lock in that green day. Well, Oracle, I think you're okay with Oracle, Jack. Long term with Oracle, I think you're going to be okay. It's one of those stocks that, look at TSM now. TSM, they're up at 90, approaching 92s, 91.80s. Nearly 7% up on the day. Let's switch over to the main account. Yeah, I'm kind of done for the day myself as it happens. So the thing is, what you don't want to be doing, once you've got the goal, what you don't want to be doing is chasing moves. Just, if you see a nice setup, great, take it. By all means, you know, be my guest. But don't be chasing momentum just because you feel like you should be trading. There's no. The whole point of trading is that it's going to free your time up to do whatever it is that you like to do. I'm going to be moving in a couple of months' time. I've got my daughter and my fiance, and I'll have a nice little villa with the pool and the sea view, and you know, and I'll be trading in the evening. So as far as I'm concerned, that's the life I want to live. You know, there's no point just trying to chase something and trading for 8. If you sat at your desk for 8 hours a day, it's going to become tedious. So you trade, get to goal, get out, and then what do you do with the rest of your day? Whatever you want. Has there been some good news that the market's moving so green? Yes, actually, the Biden has come out and said earlier, we got a big pump earlier on the S&P on the markets in general. Biden came out and stated that they're not categorically they're not going to default on the debt. So basically, what that means is that they're going to reach an agreement to either pay some off or increase the debt ceiling. They're just not going to. They're not going to default. There will be absolute outrage if they default. From about 9 till midnight, 9 p.m. till midnight. Which I don't mind because I'm nocturnal anyway. Oh. I'll still be carrying on the street. I'll still be doing this. I'll just be doing it. It'll be dark instead of daylight. They do go through this drama. It's what's known as saber rattling between the parties, and this is what happens when you've got a bipartisan government. This is not democracy. This is absolutely not democracy. It's more of an autocracy. How much screen time did I put in per day during my first 6 months? Probably about 12 hours a day, trade on one. For sure. At least 12 hours a day, probably more. I was probably sat at my desk from early doors because I was looking at all the markets. When it started off, I was looking at all the markets. When I wasn't looking at the market, I was watching videos, I was reading books, I was doing all kinds of different things. I was trading in the simulator. I was it was lockdown when I started. The first 6 months that I started, it was lockdown, so there was nothing better to do. I couldn't go out. I get arrested if I went out. I didn't even have a dog, so you know, for the first 6 months of lockdown, so I couldn't even go out. There was threats of being arrested if you tried to go. The only thing you could do is you can go out if you were jogging. You can go out from, you know, put a tracksuit bottom on. You could go out and you could you know, put on your runners and you can go out and have a walk. You're getting your exercise. But even you went to the store, there was a queue at the store. There were only like 5 people in it at a time. It was just, you're best staying home. There was 2 things you could do. You could either improve your life and educate yourself, which is what I did, or you could binge on Netflix and box sets, which is what most people did. Strange times. We'll look back at it in 5-10 years' time, and I'm looking back at it now and thinking, did that really happen? Strange times. It's kind of funny because I got I went across to the Philippines there on February, and I was flying Cathay Pacific, and it got cancelled because of the pandemic, and I had to get rerouted and get a different flight, and I got the last flight into the Philippines with, I can't even remember who it was. I think it was Thai Airways, and that was February 2020. Courtois pulling out the stops again. Oof. That's a great header from Haaland and a great save matching it from Courtois. That's TSM pulling back now. Yeah, it was bizarro world. It really was. And when you got out, it was strange. It's strange again. So there was an entire generation of kids. So I'm living in Dublin. There was an entire generation of kids for the best part of 2 years that they were kind of isolated from the friends, from the peers. So when lockdown was eased, they just went absolutely mental. They went nuts. They went off the rails. The pubs still weren't open, so they couldn't go to the pubs. They turned 18, so they were able to have a drink, but they couldn't go in the pubs because the pubs weren't open. And it was just absolute mental. They just went nuts in Dublin city centre for about 6 months in a row. It was insane. I mean, yeah, we're just now power hour. Hang on a minute. Guard Force seems to be making a bit of a move. Yeah, I'm not feeling that either. And if it could sustain these candles that were kind of 30,000-40,000 in volume, then maybe, but oh, City have scored. Bernardo Silva, complete topper. Hate the guy. Well, they're all going mental now. They think they've won it. It's like 22 minutes in, and City think they've won it. They might have, but I mean, it's the reactions are a little bit OTT. Oh, well, you might have done, Calvis. I certainly didn't. I wouldn't say people were scared to go to the hospital. They were being told not to go to the hospital is the bottom line. I mean, there was a whole bunch of misinformation going out at the same time. You look back at it, and there's a whole bunch of misinformation around that time. Still to this day as well. Yeah, did you hear about that, Jack, that there was a hacker, or pretend hacker, was playing around with Bing AI, and I think it's Sydney. Is it Sydney? I think it's called. Told it he could put it in his phone hacks and could shut it down, and it got quite scary with the responses. Yeah. Everybody was doing TikToks though. That's what, basically, without COVID, there would be no TikTok. I mean, TikTok took over from the old Vines, or Vine or whatever it was. But is it Musically? It used to be called. But without lockdown, without COVID, there wouldn't be a TikTok. It would never have garnered the popularity that it currently has. I'm glad it does, because let's face it, it's well, for me, it's I wouldn't be on social media without it. I wouldn't have this channel without TikTok. That's where I started, just streaming on TikTok. So, you know. Yeah, not a lot moving. There's going to be something really pumped in about 5 minutes. I can see it. It's like the calm before the storm. There's just nothing moving. We're talking like over 15 minutes. The biggest mover is like 3%. Marathon Digital. Oh, that's been... How's this gone under the radar? 10% up on the day, but it's been a slow burner across the. That's a very steady gain all the way up there. That's gone under the radar. I'm surprised that nobody's called that one out. I mean, the level 2's stacked, so I wouldn't trade it, but it's not volatile enough. We're talking like 3 cents on the average true range. But it's gone under the radar. So look at it on the 5-minute. It's even so those of you on TikTok, look at that steady gains across the course of the day there on Marathon Digital. That's like a straight 45-degree or 30-degree incline. Yeah, I'd say 30 to 35 degrees. That's a nice steady climb. That looks like my equity curve for the last year. Not quite, Jack. I see what you're saying, but machine learning is advanced search algorithms, and but AI is different. Because AI is evolving, and that's the scary. It's the kind of scary thing about it. Whereas machine learning stays within its parameters, whereas AI is just that one step further. But yeah, kind of scary. AI, let's have a look at AI, by the way. Yeah, it's same kind of pattern with AI as well. T3 AI. On the 5 minutes, it's pretty much the same chart as we've just seen with Marathon Digital. Okay, who's messaging me in the Discord? Yeah, Phil, absolutely. I'm not sure because at the end of the day, the thing is with AI, whilst it can be scary, you can unplug it. Even if it needs electricity to live. So even if it becomes sentient, which it isn't sentient right now, but even if it becomes sentient, you can just unplug it if it becomes dangerous. You know? Yeah, 40,000 chemical weapons. If you get an inkling that it's going to release them, you unplug it. I wouldn't trust a single country with AI, Calvus. I wouldn't trust a single country. There's not a country on the planet I would trust with any kind of WMD. Simple. Because let's face it, there's not a single government on the planet that's trustworthy. Probably New Zealand, maybe. But even then, that's a stretch. Absolutely, Jack. From a hype perspective, so it's the new NFTs. So at the moment, if you're able to put out some kind of AI-related press release, your stock's gonna pump. That's the way it's working. The last time there was a ad or a hype train that did this, it was NFTs. So that would have been the back of what, 2021-ish. Kind of autumn or if you're in America, the fall of 2021. NFTs were the big thing, the next big thing, and it lasted about 3 months up until the collapse of the bull market, And then NFTs have just faded into the wilderness for what they are, which is this massive scam, a massive Ponzi scheme. I mean, let's face it, NFTs, while some of them have real world utility, the majority of them are just scams. And as are most crypto coins or tokens, the majority of them are just scams. They're just people that have found an algorithm that potentially could be used for something else, and they push it out there and charge people for money, and people pay for it, and they make money out of nothing. They're basically printing money out of thin air, is what they're doing. I mean, granted, that's what the Fed does on a daily, but they're a government. They're allowed to do that. Whereas people who invent some kind of algorithm, call it a crypto coin or some kind of token, and put it on the blockchain, some kind of blockchain, whether it be Ethereum or another, and then charge people for what has effectively cost nothing, or the guts of nothing, and make millions off it. It's a new way to print money. No, absolutely, Calvus. AI is unchecked. It will be dangerous. Remember RoboCop? I don't know if you're all of not the more recent version. That was crap. The original 1980s version of RoboCop, where it had the prime directives. He had his 3 prime directives. AI without having 3 prime directives would, it left unchecked, could be very dangerous. But ultimately, you can just unplug it, like I said. So we're nowhere near reaching the levels of Skynet and Teradyne systems, and Arnold Schwarzenegger lookalikes coming off a production line. Actually, you do get a lot of Arnold Schwarzenegger lookalikes coming off a production line. It's called Miami Beach. Calvin Hill's interesting. He's a proper scammer. Well, no, he's a proper grifter. That's probably what it is. Calvin Hill's a proper grifter. He's had some really good networking opportunities from his production days, but that doesn't stop him grifting. And he likes to talk about crypto like he knows what he's on about. And quite frankly, he's okay. But yeah, would you like to play a game? 1980s. Who was? Didn't he marry Sarah Jessica Parker? Pretty sure he married. Let me get Matthew Broderick. He did. He married Sarah Jessica Parker. Pretty sure he did. Before she was Carrie. And I mean Carrie, not the goat's blood, pig's blood Carrie. I mean Carrie from Sex and the City. When she was super hot. Well, anything moving, guys? Hang on a minute. We've got to move up. We have a winner. I have a mover. Oh, well, there's something popping up at least. Centra. Yeah. What a dull end to a trading day. For a good trading day. I'll take the dull ends to a trading day when we've had a good trading day. Oh, 2-0 to City. Silver again. Silver on the double. 2-0 to Manchester City. Well, didn't Madrid race to a 2-0 lead last week, only to be pulled back? Am I trading futures or CFDs? Neither. Do I trade cryptos on this channel, Calvis? I know you're taking the piss now, but no, I don't trade crypto. Don't trade futures. Equities only. No crypto, no futures, no forex. Equities only. I'll talk about crypto. I don't mind talking about it. I'm not an expert. I'm just a fat guy on the internet with an opinion. I'm no expert, but let's look at the 1 minute. It's a little bit more volatile. Do I trade Pokemon cards? No, so I don't mind talking about futures. I mean, the closest I'm getting to futures is the ETF. So trading the futures market, looking at the SPY, which is effectively like trading the E-mini. So for those of you that trade futures, you'll know what the E-mini is. I'm a bit drunk tonight too as well, which reminds me, I need a top up. Cheers, guys. I appreciate you coming along and joining me for my little trading journey. I hope that you're finding value in what I'm spewing. If not, then I'm sorry, but I hope you're finding it entertaining if it's not valuable to you. Cheers. So equities, no leverage, 500 deposit. What's the minimal position size? So equities, yes. No leverage, wrong. 500 deposit, too small. What's your minimum position size? Okay, so my minimum position size will be 50 shares, depending on the stock. So I've got a higher price stock. So I've got there on my main account. So what you're probably referring to with the 500 deposit is the small account challenge. So the small account challenge, just kind of rewinding slightly. The small account challenge, we took $500 at the beginning of the month, and the goal is to grow that small account to $15,000. I'm not putting a time frame on that because it's very difficult to do that. Leverage up to 6 times. So depending on the stock, it's got to be stocks above $5. I don't get any leverage on anything less than $5 per share, that is. So I'm looking for stocks above $5 that I can take leverage. Not every stock's got I can get margin leverage with. So it's a selective. I've got to be selective in the trades that I take. So today I've taken one trade with Exela. I got 6 times leverage. I took 500 shares, and I'll show you where I got in on this one earlier. Here's one I made earlier. And why am I not seeing my... I'm not seeing my little triangles. That's a bit strange. That's because I'm on TSM, not Exela. Duh. I've had too much wine. So here we go. Here we go. So I took trades on this one. Very quick. Move up, consolidation, new highs, enter, pull back, add to the position, take profit, stopped out. That was take profit, stopped out. That was it. Pull back. I didn't trade that again. Over gold. Why bother trading it again? So that's that was Exela. Quick entry there. I'll zoom in so we can actually see. Quick entry there. 500 shares. Pull back another 250. Then take profit up at the top. put a stop in place and got stopped out as it pulled back. So that was Exela, $137. We started today with just over $1,000 in $1,008 in the equity position. So we've grown from $500 to $1,008 today. We've added in another 137 to it today. Well, it won't be. It'll probably be about 120 after fees and charges, but another 120 on that. So we're over 1,100 on the small account. So it's over goal. We're looking at growing the account 10% daily until we get to goal, which is 15,000, and that's what we're trying to do. So it's stocks and shares, not CFDs. I've got a direct. I'm using a direct to market platform here in Dash Trader. So it's not a contract for difference or anything like that. Now let's go back to my main account. Where I've traded 4 things. Do I cover options in my programs? An introduction to options, yes, Dan. I do have. I've written an options trading, an options trading, a trading options course, but I've not recorded it yet. So I've done a couple of. There's a little bit there on an introduction to options and doing it. If you have leverage, isn't that effectively a CFD? No, it's not, TM Run. So a CFD is that you're betting on the price difference. If you are trading on leverage, what you're getting is a loan from your broker to buy the stock. So you, in effect, own that stock, even though you actually borrowed money from your broker to buy that stock. So you actually affect the price action. No matter how small of an effect you have on the price action, a CFD, you buying the CFD has no impact on the price action whatsoever. So you don't suck up any liquidity, you don't add any liquidity. Your buy price doesn't impact the sell price or anything. Your buying and trading CFDs has zero impact on the market whatsoever. However, when you're trading on leverage, you're actually buying the underlying asset. So you're removing liquidity from the market until you then sell and add liquidity to the market. So with that in mind, you can impact the price. I know you're not going to impact it too much because you're only taking small positions, relatively speaking, to the float size. But collectively, you're actually adding, affecting the market and the market price. CFDs, you don't. As do I, Jack. Roger, that's not no, actually, the CFD is different to options entirely. So options is a contract to be able to buy the underlying asset at a set price within a certain time frame. So it's completely different to CFDs. And options have expiring value, so they have depreciating value over time. And they have an expiry date where they will potentially expire worthless as well. So the broker gives you leverage, TM Run. So my broker, Capital Markets, will give me up to 6 times leverage, depending on the stock, depending on the price of the stock. If it's over $5, and depending on the risk of the stock itself, they will require a holding margin. So that holding margin could be 16%, which means I'm getting 6 times leverage. So I can buy, if I've got 1,000, like right, I started with $1,000 in my account today, and I took up to $750 with 750 shares of a $5 stock. With $1,000. Of course, I can't afford that with $1,000, so I'm borrowing money from the broker to buy those shares, and then when I sell them at a later time, I'm giving that initial money I borrowed back to the broker, but I'm keeping the balance. I'm keeping the any profits, or I'm suffering any losses off my equity. The broker always takes their pound of flesh plus commissions. And if I hold the positions in the long term, they will charge me interest on that margin loan as well. Which is why, if you're going to be holding positions long term, don't do it in a margin account, because the position you take even if you don't actually use your leverage up, your margin up, you'll be charged margin interest. So you'll be paying interest on that as if it's a margin loan. So don't hold long-term positions in a margin account. Have a cash account and hold your positions long-term in your cash account. For talking about long-term investing, just do it in a cash account. Nothing moving. Absolutely, totally agree with you at the moment. By the dip, we've got 10 minutes left of the market. Do you know what? There's probably nothing moving. Hang on a minute. There was a couple of things that had earnings. I think it was Cisco and who was the other one? There was two that I wanted to look at. I'm not going to trade them. I've had too much wine, but I might take a look at them. Cisco and Take-Two. Well, let's put that on the watch list. Cisco and Take-Two. CSCO. Okay, so I'll put that on the watch list, and we'll have a look at those in a moment. So Cisco before earnings, kind of moving up. Let's see what happens. Take-Two, the opposite, is moving down. So we'll see what happens. So both of them green on the day. Man City on fire. Well, it looks that way. Alistair. But then again, wasn't Madrid on fire? They went 2-0 up last week, so anything could happen. Yeah, Target and Laser, I'm not too... I'm not really into those. I think Cisco and Take-Two are probably the two worth watching for me. You might be right. Let's have a look at Target. Target up at 161. Excuse me. Wasn't Target's earnings this morning? Yes. I thought Target had earnings this morning. Hang on a minute. Yeah, Target's earnings came out this morning, but not an after hours job. (17th of the 5th), and Lumina earnings came out on the 7th. Oh no, that's not right. Lumina's earnings are intraday on the 9th, or later this week, not today. Oh no, they've already come out. They came out last week. Those are from last week. Yes, it does. Well, it doesn't, but you can get. I can get you a discount. So there's a couple of things, Calvin. So if you want to just trade the simulator with Dash Trader, then you go to Dash, and you sign up, for the. $120 option, and you can get the using then you email them or email me and I'll email them or whatever, and you'll get it upgraded to the deluxe version, which is like $150, which has a total view using DTWT, day trade with Tony, or HWT, I can't remember. I'll double check for you, but there's no direct discount with my link. You just got to sign up and then get them up to upgrade the package. However, that being said, if you signed up with CMEG as a broker, you can get $120 platform fees for Dash Trader with CMEG as a broker, and that's for the first 3 months whilst you're learning, and then it's up to you if you want to use them as a broker. Just use the simulator instead. Alistair, always a good thing to do. When in doubt, zoom out. If you've found yourself losing a bit too much, you're probably trading too big anyway. So scale back and get back into the zone. It's not the first time you've done that, Alistair, traded like a fool, but you know, just take a step back. Look at. I don't think you're logging your trades. Are you using TraderView or something else, Alistair? Because I don't think you're logging your. You need to log your trades so you can actually review them, and go back and review your trades every day. Review your trades at the end of each day. Review your trades, and you'll know when you've lost, why you've lost, and you'll know when you've been a bit silly, or you've not, you've not stuck to the strategy that you trade by, and you'll learn from it. If you don't log your trades, it's much more difficult to actually review them after the fact and say, okay, that's why I've lost, and this is why I need to be more disciplined and stick to the strategies at hand. If you look at your trading and think, well, that entry's on point, that's what, and I got caught in a flush, an algorithmic flush or whatever, and you can put that down to a bad call. But more often than not, you'll find out by reviewing your trades, it's user error. You've made a mistake, and that's why you've lost. Yeah, and upgrade. It lasts as long as your subscription lasts, Calvus. Yeah, no, I like TraderView. I mean, let's have a look. Let's go into TraderView right now, and let me just pull it up here. Let's go into TraderView right now, and I'll show you this. Where are you? So this is TraderView right now, and I like TraderView. I like using. There are others. I'm not saying you need to use TraderView for logging your trades and journaling and things like that. I like TraderView. I'm just going to kind of pull this up here for the beginning of the month. So if we look at, that's nice. You're hiring. I don't care. I'm not coming working for you. So if we look at TraderView for the beginning of the month here, I can look at let's just look at the journal, for example. I've not imported my trades yet, so this is from yesterday. So I can go into one of these. So small account, I can. What was the start? Let's look at GDC. Okay, let's look at GDC yesterday. See this now. TraderView, TradingView. You've got all this on TradingView in. So you've got all the entries and exits here. It's great. So I might start doing my trade recaps in TraderView for looking at this. You've got the charts. You can actually look at whatever. 1 minute, 5 minute, 3 minute, 15 minute, 30 minute, whatever, and it shows your entries and exits, and it's great. But that's TraderView. So anyway, If you want TraderView, check out TraderView. It's in my link tree. It's the links are these links are in the description to the video if you're watching on YouTube or Rumble. So TraderView, you get there, and that's TraderView. If you want me to be your mentor, if you want to learn how to trade from my strategies, or not so much my strategies, but the strategies that I use, then Day Trade with Tony here is quite simple. Just click the link in the description or in my link tree. If you're watching on TikTok, the link tree is in my profile. So go to my profile and you'll see the link tree, the TikTok trade. It'll take you to that link. This is the whole syllabus for Day Trade with Tony. Someone was saying, what do I know? Do I do anything about options? So I've got options here. There's an introduction to options there. There's a whole chapter on options trading. So over an hour-long lecture there. There's a bonus swing trading course as well. So someone was talking about swing trading. So I've got that in there as well. It's 119. So look at this. This is great. So again, let's go back to the link tree. If you've not got a VPN, there's a link to Surfshark in the description or in my link tree. Check out Surfshark. If you've got a VPN, use it. Okay, before you buy anything, use it, because I'll just switch my VPN on. Where is my VPN? Here it is. I'll just switch my VPN. I'm going to switch to Brazil today. I think I did India last time, so I'm just going to switch to Brazil. And whilst that's connecting, I'll just wait for it to connect. You know what VPNs are like. They take a while to connect first and foremost, but once they're connected, it's good. So there it's connected, and then it's $146 a month. If I just refresh that now, but I'm doing it from Brazil, $119 a month. So if you've got a VPN and you want to go and pay less, get your VPN, route it through a low economy nation, a low economy country like an India or a Brazil or the Philippines or wherever you're from, and you're getting a discount there. It's not so much a discount, it's just the way that the taxes on the product that you're buying. It's not just my product here for Day Trade with Tony. It's the same with if you're buying like Spotify or Netflix or any other digital service. Use your VPN. And I'll disconnect my VPN and refresh it again, and lo and behold, it's back up at the same price. So there you go. So use your VPN, and I would do that not just with me, but with any other digital service that you're acquiring. Look for a VPN service. Go to use what's it called? Incognito tab on your browser or something, and open an incognito tab. Launch your VPN, and then go to wherever you want to buy, then buy it, and then you can buy it for, usually you get 10-15% cheaper because of the locality that you're buying it from, and then you can log in from wherever location you're at. So whatever digital service. So if you're wondering what I'm talking about, that's a VPN. You can use Surfshark or any other VPN that you want. But I get the kickback if you sign up to Surfshark. That's why I've got it. So they're an affiliate link. If you subscribe to Surfshark and do that, and then also if you're using Netflix, you can log in and go to whatever Netflix that you want to and get the content. So this is the link trees. I've already talked about Day Trade with Tony. If you want to find stocks, so the scanners that I use are Benzinga. What is Benzinga? Well, quite frankly, this is Benzinga. This is what I've got my Benzinga to look like. This is what I've got my Benzinga set up. Now, these two are little widgets I've popped out for the purpose of the stream, but this is what my desktop looks like on a daily basis. So this is my gap scanner, my momentum scanner, real time. I can switch this for 60 minutes, 30 minutes, 5 minutes, 15 minutes, whatever I want. I've got my signals and alerts. I've got my rolling news ticker. In terms of calendars for earnings, I can pull up earnings, IPOs, I can pull up whatever I want. So this has got earnings, I can pull up IPOs. So CWD was the IPO for today. I can pull up the economic thing. So at the moment I've got, sort by country for the US. I can find out what economic issues are taking place. So like CPI data drops are coming out, the Fed speaking, or the Fed, you know, rate increases, anything like that. Yes, I've got videos on Benzinga Pro available. They're up on YouTube already, Aubrey. So Benzinga and things like that. So this is Benzinga right now. This is how I've got my Benzinga set up. You can use it for, and as well, also in Benzinga, you can use the charting functionality, and it's just trading view charts. So as this comes up, it'll come up with a SPY, and this is trading view. Look, we've got a trading view chart. Without even subscribing to TradingView, I've got the trading view, I've got the SPY chart up from TradingView, and I can do, like, you know, there you go, there's a little arrow and drawing and stuff on that, and the same thing as you would do with TradingView. So that's Benzinga on the charting. What else have I got? Insider knowledge there, who's buying from inside the company. Research, I've not spent much time into that, so I'm not going to show that because I wanted to learn more about that. Yeah, everything you need here. You've even got a squawk, you can audible squawk, you can actually open that up, and you'll get news alerts and signals from Benzinga audibly, so you can listen for it, you can go and do whatever you're doing, and then have it on in the background, and it will tell you when things are moving. So that's Benzinga. It's great. I wouldn't be anywhere near as profitable as I am without Benzinga. Check it out. The good thing about Benzinga is you can get 35% off if you use my discount code when you sign up. Go sign up free for 14 days through this link, and then use my discount code when you sign up. Capital Markets is the broker that I use, so people asking, so you can, no PDT restrictions with Capital Markets, up to 6 times leverage on stock. So if you've got $1,000 in there, you've got up to 6 times buying power, so it's $6,000 of buying power. The commissions, charges, and they're very affordable in comparison to other brokers as well. TradingView charting platform, as I mentioned. The platform that I'm using is Dash Trader. If you use Dash Trader, if you sign up to Dash Trader, there's a subscription. It's like 120 bucks. If you sign up to Dash Trader and you sign up for it, let me know. Message me. My emails are all up here. Message me, and then I will get in touch with Dash Trader and get you upgraded to the deluxe version, which includes all the level 2 total view and everything else. So yeah, aside from that, I think I'm done for the day. So let's get rid of all this. And I'll go back to here. And I think we're done for the day. So I'll be dropping a trade recap a little bit later, and I will have the recording. So if you want to watch the previous recordings of the trades that I've taken, then go watch them on the live recording from earlier. If you want to watch the trading on the trade I took on Bosch, which actually took me to goal, then I will drop that on today's trade recap. I'll stick it on the back at the end of today's recap. Other than that, I'll be back at it tomorrow, 90 minutes before the market opens. So, yeah. Right, okay, let's go through the chat before I log off. Have I ever tried TradeStation? No. Nobody trades like me. Well, look, the trade, how I learned how to trade. I'm self-taught, so how I've learned to trade. Everything's freely available on the internet, but it took me a while to get there. So what I'm doing is I've condensed all my knowledge and put back on your request. You guys asked me to do it, so I put it, and now you guys can get access to it. So by all means, do that. I'm not a goat, even though I've got a beard. Yes, hello, you. She's been on the balcony all this time. And Legend gets banded about too much. Okay, Aubrey. I've got videos for Benzinga, and I think they're in the member section on YouTube. I'm not sure, but there's all kinds of Benzinga Benzinga Pro tutorials. In the Day Trade with Tony course, there's a whole chapter on stock selection and trade selection, which includes scanners and scanning, which I use Benzinga. It's agnostic, so you don't have to use Benzinga. You can use similar settings for FinViz or Trade Ideas or any other scanning tool. But I use Benzinga. I recommend Benzinga. I think it's probably the best value tool out there for stock picks, alerts, and signals. And they go a lot further than just a platform as well. If you've got the Benzinga Pro, you get access to a lot of tutorials and whatnot as well. So in the meantime, well, that's the idea, Robert. Is you're a rookie now. Hopefully, we'll all be professionals in a couple of years' time. So in the meantime, take it easy. I'll be back tomorrow, same time, same place, an hour before the market opens, 8:30 a.m. market time, 1:30 p.m. here, where I'm based. In the UK is the same time, so don't worry about that. And I hope to see you all there. In the meantime, if you've not smashed the thumbs up button on YouTube, how dare you? And if you've not tapped the screen 10 times on TikTok, how dare you? And I'll see you tomorrow. Enjoy the rest of your evening, guys. Take care.